Group. And first off, I hope you're having a great summer so far. I know it's needless to say some crazy times out there in the world right now, and honestly the real estate market as well. Sorry if it's been a little bit since you've heard from me. Been spending a lot of time with the family and have been really busy actually. So this is one of the best real estate markets we've seen in quite some time. Just wanted to give you a quick update. I'm going to go through this as quickly as I can. I got a lot of good information, but I'm going to buzz through it rather fast. If you have any questions, my contact information is at the end of this, of course. Feel free to shoot me a text, send me a call, send me a message. I will definitely follow up with you and answer any questions in greater detail. But just want to give you kind of an update on where we're at in the economy and what we're seeing in the real estate market. We're kind of halfway through the year right now, and I get a lot of questions about, Chuck, what's going on in the market. So here it is. Here's kind of where we're at as far as the economy goes and where people are feeling comfortable given the craziness that we're dealing with. Real estate still is winning out. So we are still the vast majority of where people feel safe as far as their investments goes at 35%. You'll see kind of the stock market where it's going at right now. It's a little bit of volatility there, and then kind of followed up by some savings in gold. Still, Americans choose as real estate as one of the safest investments, and they see that out there. It continues to be a great market, even given the times with COVID and everything else right now. And the slide kind of replicates that and kind of looks a little bit into the future on what people think are going to be the safest investments over the next 10 years, with 27% believing that housing and real estate will be that safe investment, followed up by savings accounts, investing in gold, bonds, and stocks. Obviously, a lot in the news right now is around unemployment. So where have we been and where have we gone? So once COVID kind of took off, you can see obviously the drastic jump in unemployment, which really is going to shape a lot of the story around where the housing market goes, I think. Great news in kind of the June reports where the numbers have definitely come down as far as unemployment goes. I've seen some stuff recently in the news where it's kind of dipping back up. So we'll see, and we want to definitely kind of keep an eye on where the unemployment rate goes, because that obviously will have an impact on the housing and our marketplace. A little bit more information about kind of where some of those job losses and gains have been. As you can imagine, a vast majority of those are in kind of the leisure and hospitality, retail, restaurant services. Unfortunately, with kind of everything shutting down, we've all changed the way that we're living, and those jobs have obviously greatly suffered. What are some of the projections as far as some of the unemployment goes? I'm sure you maybe have seen this or maybe not. You kind of look during the Great Depression and how long those unemployment numbers were so high. You kind of look in the middle of the screen at the Great Recession, where we felt that pretty significantly for quite some time as well. But then you kind of look into 2020 and where they're forecasting, yes, this year is going to be rough. But going into next year and the following years, they're definitely predicting an unemployment rate significantly lower than where we're at today. So hopefully good projections here in the future. What has happened in the last 5 recessions to housing? So actually, if you look at the information, the last 5 recessions, only 2 of them resulted in negative home prices. In 91, there was a slight dip, about 1.9%. Obviously, the most recent and the most drastic was in 2008, where we saw almost a 20% reduction in home prices. But actually, out of the last 3 recessions, or the previous 3 recessions, home prices actually increased at a 3 to 6% rate. Definitely don't feel like we're in the 2006, 2007 bubble. It's just a different time, and it's a different situation that led up to that bubble, which really caused the recession, right? So I think housing caused that recession back in 2008, whereas today it just doesn't feel like it's the same at all. This is a little bit of a slide just talking about where mortgage availability is. If you look, basically the higher on the graph, the easier it was to get a loan. So in 2006, it was at a number of 868.7, whereas today it's 181.3. So the guidelines to get a mortgage have just become stricter, and it's a little bit more difficult to get financing, which is definitely going to hopefully protect our economy and protect the housing market. Definitely the months of inventory is drastically different than from now. We had 8.2 months supply of inventory back in 2007. We just had a lot of homes available. I remember, I grew up in a new construction family, and I remember when my mom worked, they had a lot of houses coming out of the ground, and that resulted in a lot of what we felt back then. In today's world, we just don't have inventory. There's just a small number of homes available, and they're getting gobbled up fairly quickly. It's very price point sensitive. We'll jump into that here in a second, but again, just a different landscape. Annual home price appreciation nowhere near as crazy as it was back then as well. You see in this chart, I mean, we had some pretty crazy double-digit growth appreciation, whereas over the last 6 years, we've seen a more consistent kind of 4 to 5, 6% price appreciation. And some of the economists are predicting that kind of continued going into this year. We're going to see probably a 3 to 4% and probably echoed next year and the following years as well. So just again, a little bit different landscape. What caused a lot of that 2008 crash is people were basically using their homes as credit cards. If you look back then, where people were refinancing and just the sheer volume of refinances in 2005, 6, and 7 versus 17 through 19, it's just, again, a different landscape. This slide actually is mind-blowing to me, and I hear this data and I say this data and it's hard to believe. But actually, 42% of Americans do not have a mortgage on their home, or they have 100% equity in their home, which is pretty awesome. Another 16% have over 60% equity in their home. So there is just a lot of equity out there right now in home ownership. So even though we do have some issues with forbearance in light of the COVID situation and in light of where we're at with things, the good news is that if you look at this slide, almost 60% of people that are done the forbearance have over 30% equity in their home. So a lot of people, if times do continue to kind of struggle and get tough, they're definitely going to be able to sell that home and walk away with some cash versus having to lose it potentially to the bank or the foreclosure process or anything like that. So again, just it feels like a little bit different landscape. Obviously, where and how quickly are we to come back at this? You look at some of the major investors out there and kind of what their projections are as far as Goldman and JP Morgan. It really is kind of that V shape where we don't really anticipate it lasting super long. Obviously, I think the race to a vaccine is going to depict and kind of control a lot of this. But again, hopefully a fairly quick recovery. And we've seen that over, honestly, the last month. The housing market has just taken off. So kind of going into the housing market, and I'm going to do a quick summary from a national level and then jump into the local level. So nationally, here's where the trends were, which Atlanta's going to follow very similar. Once kind of COVID really took off, you just saw activity kind of come to a screeching halt. This is the number of showings that we've seen, so how many people are actually going through the door of a property for sale, and it is just tanked, although it has quickly rebounded, as you can see in this slide. Year-over-year change in activity is actually up 21%. So again, the market has recovered quite drastically given the decline we had kind of in the early part of this year. Pending sales are up 18% across the nation. Listings are up 5%. Listings taken are up month over month 5%, but our total number of listings are still down 20% year over year. So we just don't have a whole ton of inventory out there. I know I'm talking fast, so again, if you have any questions as we go through this, or if you have any follow-up questions, please don't hesitate to reach out. As far as the inventory as a percentage of households and is half over the long run, we just don't have a lot of inventory. It's almost literally half of what it really should be, and so we just need some more homes available to sell. Quick chart as far as where home prices are projected. Really at the end of the day, you look at kind of these 6 sources. For the most part, everyone's predicting a positive price appreciation. Again, it's going to be a little bit more subtle, we think. I think probably in that 3%. I think Atlanta's really tough because you got so many little micro markets between Roswell and Alpharetta, Brookhaven, Buckhead. You pick it. They all have kind of their own little niches, and so it's going to be interesting. But I definitely see from what we're seeing on the boots on the ground that this makes sense to me, that we'll see a 3 to 4% price appreciation. So again, inventory is extremely low. It's going to hopefully protect the home values out there. Mortgage rates, I mean, I just had a closing yesterday actually at below 3%. So mortgage rates are historically low. Again, hopefully going to protect our housing market that we see out there. It's interesting. A lot of people have, in light of the situation, in light of the COVID pandemic, they really have taken a flock to the suburbs and have gotten out of these high density urban areas. We're seeing it up in New York. We're seeing it in some of downtown and midtown Atlanta. I know our northern suburbs have been extremely busy. So it's going to be interesting to see how this just shapes the way our market goes. I mean, again, another slide talking about 16% people showing a greater desire to be in non-urban properties. They want to be more in the rural, suburban area. So a little bit different where over the years it's been a flock to in-town and walkability. And I still think that's a huge factor for folks. They're looking for a little bit more space, better backyard situations, a little bit more breathing room. Percentage of agents who say bidding wars are increasing. Again, this is across the nation. So obviously in March, when things really kind of got serious, we definitely saw a decline in that. But June has picked back up. I have been in multiple bidding wars, and there's definitely some strategic ways we can structure an offer and things like that. But again, the market has just gotten really fierce out there. I'm going to skip over that side. We'll just jump over to the average days on market. We're still seeing a pretty healthy market with just up to 30 days in Georgia. I guess New Mexico looks like they're taking a little bit longer. Again, it all is very price point sensitive into our marketplace. So again, we'll talk further about that. Seller traffic. So this is our problem here in Georgia. We just don't have a lot of inventory, like I mentioned about 50 times already. So there's just not a whole lot of homes for sale. And so we can definitely talk through the logistics of, hey, Chuck, I got to sell my house in order to buy a house, and what does that all look like? We have some creative ways to find homes that are not on the market. We were very successful this year with several clients finding some off-market properties. So there's ways to get it done. Buyer traffic for us has remained pretty stable. So Georgia is going to continue to be one of the more sought-after locations. Believe it or not, we're pretty affordable in the grand scheme of things. I know that's hard to stomach sometimes when you see some of our pricing. But again, we do beat out most of the nation as far as affordability goes. A little bit more information about mortgages. They are not going anywhere, in my guess, and they are phenomenal. So your buying power right now from a mortgage perspective is huge. I mean, we're seeing rates below 3% at 3%, and I don't think they're really honestly going to go anywhere anytime soon. This slide kind of echoes that when you look into kind of 2021, Q1 and Q2. Everyone's still kind of hovering around that 3%, so it's probably projected to dip even a little bit more, allowing you a little bit more home affordability. All right, that's enough of the national stuff, enough of the economy stuff. Here's kind of the really meat of it as far as what's going on in our marketplace in the greater metro Atlanta market. So just like that national slide, this is our actual showing time data. So this is specific to Atlanta, which shows the number of showings we've seen. So you can obviously, the orange, or I guess that is orange, take a pretty significant dip kind of towards the early part of March, all throughout April. But you kind of see very quickly it rebounded and is really trending quite impressively. So we're seeing a definitely increased number of showings. We've done a lot of these showings now virtually. There's a few different ways that we can go ahead and sell your house now. So a lot of different options out there. This is our contract trend. So a little hard to kind of maybe stomach and kind of read all this, but if you look at the gray, it's the prior year. The purple or the Cabernet is the current month. So we took a big dip in kind of that March, April, but you can see the huge rebound in May. So I mean, and going into June, under contracts are up 12, almost 13% compared to May, and they're up 25% year over year. So we've seen a very big tick in under contracts increase. New listing trends. So again, gray is prior year, Cabernet is current month. So June listings, unfortunately, are down almost 10% year over year. But they are up a little bit from May. So more and more people are kind of getting comfortable with the idea of selling their home. So we are getting a little bit of help there on the inventory, but I'll tell you, it's still extremely low, depending, again, which price point we're talking about. And I think there's a slide coming up that will speak to that. Closing units. So for the last 2 years, our closings were up almost 36% from May. So again, given in light the circumstances, we've seen a little bit of everybody put things on pause, but it has rebounded extremely quickly. So year over year, closings are up just at 1%. So we're seeing a little bit of increase year over year, but great news given the circumstances. Metro Atlanta closings June 2020. So this is where it gets interesting as far as the price point sensitivity goes. You can see on this slide, 85% of our transactions that transact in Atlanta are between that 100 to 500,000, with really the meat of it in that 2 to 500,000. I tell clients all the time, if you're kind of in that 500,000 and below, it is very much a seller's marketplace. Little fewer transactions between the 500 and a million. The air gets pretty thin at $1 million to $2 million. There's just a lot fewer, obviously, buyers at that price point, so the transactions are significantly lower. Inventory, again, this kind of, I've mentioned this about 100 times now, I guess. So inventory is down 12% from last month. We're down 38% compared to last year. So just a lot fewer homes for sale. If you think of a very simple supply-demand model, the inventory is lower, the demand is actually still pretty high, so prices have held really strong. I know there's some buyers out there that don't think that will be the case, but I can't tell you that I'm seeing any price really reductions at this point. It's really been into the positive. There's a little bit of information. What is a normal market? Normal is about 6 to 7 months. Anything less than that is very much a seller's market. Anything greater than that is very much a buyer's market. And this is where it gets into the price point. When you kind of take a look at the far right slide, 2 million plus, it is very much a buyer's market. You get into the million to 2 million, again, it's still pretty strong a buyer's market. There's a lot of inventory there. And then you kind of jump down in below the million mark, and it drastically changes landscapes where there's just not a whole lot of homes for sale, and especially in that 200 to 500 and kind of 100 to 500, where 85% of the transactions have occurred. I mean, you don't even have 2 months supply of inventory, so it's a good place to be if you're in that price point. Days on market, again, is going to really depend on your price point. These are continuous days on market, where we're seeing on average kind of 30 to 60 days. As you get in the higher price point, obviously it's significantly longer. Sales ratio, people often ask, like, what's the list to sell ratio? Again, very price point sensitive. In your higher end stuff, you're just not going to see it transact as close to the list price. But everything else is held pretty strong, probably to 97 to 98% of list price, which is great. So average sales prices. So average sales price is up 5% compared to last month. It's up almost 2% from last June. So prices, like we said, have kind of continued to hold steady and have continued to rise ever so slightly. A little bit more information about sales price. It's kind of hard to use in our marketplace because, again, we have such specific sub-markets. But on average, we're up 80% from 2011 with $320, $320,000 rather, is the average sales price, as that kind of has continued to climb over the last several years. Case-Shiller Index for Metro Atlanta. So really, it's just a positive trend line is more what we want to see here, and it's definitely great. I mean, home values are up 63% from the bottom of March 2012. So we've just seen a steady, healthy incline as far as home prices go. Again, that same slide kind of echoed a little bit differently as far as just a more normal trend line. Lots of information. I know it's a long video, guys. Sorry for all the information. Wanted to pass it along, though, just because I'm getting a lot of questions. Chuck, where's the market? How are things going? I guess in summary, where I would say the market is that we have a very strong market depending on your price point. So depending on your situation and depending on where you're at on pricing, it really kind of depends. And so if you're a seller that's looking to sell right now, but you have to also buy, let's talk about that. I know it's a super stressful process. We've done it countless times, and so I'll definitely kind of help you navigate those waters. If you're a buyer in this super competitive price point, let's talk about creative ways that we can win offers. We do it all day, every day. I mean, again, this is one of the best markets I've seen, believe it or not, in quite some time. So thank you so much. Appreciate your time. Hope all is well. Hope you and your families are safe. If I can answer any questions or help in any way, call me, text me, send me a message, and I'll look forward to talking to y'all soon. Take care.